Hi all, welcome to my channel. In today's video, I'm going to introduce you to one of the best leading indicators in trading, which is the demand and supply zones. So many of you might already be aware of it, but keep watching this video till the end since I'm going to introduce you to an indicator and screener based on the demand and supply zones, which really can change the way you trade. So for those who are new to the zone-based trading, here is the quick gist of what is demand and supply zones. A demand zone is basically an area where historically there was a strong buying interest and price at this area is often considered as undervalued. So in case if price revisits this zone in the future, price will gain momentum upwards and it signals potential buying opportunities. As opposite to this, the supply zone is an area where there is a strong selling interest and price at this zone is often considered as overvalued. So if the price revisits this zone in the future, price is likely to gain momentum downwards and it signals potential selling opportunities. So basically, the demand zone is the area of support and the supply zone is the area of resistance. So, when can the zones occur? So, the zones can occur in either of the scenarios. It can happen during trend reversal or it can happen during a continuing trend. So, we will see examples of all the scenarios now. So, we will see the trend reversal scenarios first. So, first is the trend reversal demand zone. So, uh, so in trend reversal demand zone, it is characterized by a strong red candle followed by a series of base candles. Base candles are nothing but candles which have long wicks and small bodies. So this signifies that there is an indecision in the market, and market participants are deciding whether the price should move upwards or downwards. So later they have decided to push the price upwards, and that is signified by a big healthier green candle. So the price will reverse from a downward trend in this case, and the period of indecision is the demand zone we are looking at. So in case if the price revisits this zone in the future, the price is likely to gain a momentum upwards. So let's see an example of this. So this is a weekly chart of ITC Limited. So here we can see that the ITC has been in a downward trend for many weeks, and at one point we can see that there is a base candle followed by a big healthier green candle. So this signifies that there is a demand zone in this area, and now let's mark this zone. Yeah, so let's extend this zone, and we can see that when the price retests this point, it has gained an upward momentum. So this is how a trend reversal demand zone works. So the next type is the trend reversal supply zone, which is basically the opposite of what we just saw. So here it is characterized by upward momentum, so it has green candles in the beginning, followed by the period of indecision or the base candles, and then it is followed by a healthier red candle. So this area is marked as supply zone, and here the price reverses from an upward trend and it changes its direction. So now let's see an example of the trend reversal supply zone. So this is a 2-hour chart of Titan. So here we can see that the price is in upward momentum for a long time, and at one point there are a series of base candles followed by a big healthier red candle. So this is the area of supply, and now let's mark the zone where the base candles lies. So here is the zone. Yeah, here is the zone, and now let's extend it towards the right side, and we can see that when the price has touched the zone, it has given a downward momentum. So it has retested twice and it has fallen twice. So this is how a trend reversal supply zone works. Yeah, so now basically the trend reversal zone will work more better than trend continuation zones. So now let's see the trend continuation zones. So as the name suggests, the market moves in a particular direction, it pauses for entire session, and it continues in the same direction. So the market participants have decided to continue the same trend. So for a demand zone, the price will be in upward momentum. It has a series of base candles for indecision, and then it is continuing its momentum upwards. So this is the area of continuous demand zone. Here the market rallies, gives a pause, and then rallies again. So now let's see an example for this type. So this is a 2-hour chart of Bharti Airtel. We can see that the price is in the upward momentum for a brief period, and in between there are a series of base candles here. Now let's mark the area where the base candles are. So here, this is the area of the demand zone, and now we can see when the price retests this point, the price has gained an upward momentum and it has gone up. So this is how continuous demand zone works. So the next type is the trend continuation supply zone. So it's basically the opposite of the previous one. The price will be in a downward momentum, pauses for indecision, and then it is continuing its downward momentum. This is the area of supply, and here the market falls, gives a pause, and then falls again. So let's see an example for this as well. So this is a 15-minute chart of HDFC Bank, and in the market has fallen for a very short time, a brief period, and in between this fall there are a series of base candles. Now let's mark the zone. So this is the zone. You can see whenever the price reaches this point, it has fallen. So this is how a continuous supply zone works. So it has fallen twice in this case. So the next question that will be coming into mind is how to identify these zones and how to track for multiple stocks. So identifying these zones manually, and if you're someone who is tracking the zones for multiple stocks, can really get hectic, and it becomes very difficult to track them manually. So now we have got it covered. So thing is, we have developed an indicator and screener wherein the indicator can mark the supply and demand zones on the chart, and the screener can filter out 40 stocks at a time and can give you the results like which stock is in what zone, whether it is in a supply zone or demand zone, or it can work across all the time frames. So let me show you how the indicator and screener works. So here I'm applying the indicator on the chart. So here I'm applying this on a 2-hour chart of TCS. So you can see that it has plotted all the demand and supply zones, whichever is present in the 2-hour chart of TCS. So now let me apply the screener as well. So I have already inputted 40 stocks in this. So it can only filter out 40 stocks because of the limitations in TradingView, but it has given me a result of which stock is in what zone. So now I'm moving to 4-hour time frame. So now let's see the results of the screener. The screener has given me which stock is in the 4-hour time frame zone or demand or supply zone. So this is how the result will be. So the nitty-gritties of the indicator and screener will be explained in detail in the upcoming video. So keep watching this space for more. And the next question that will be coming into mind is how to trade using the zone. So there are many factors that we need to consider after identifying the zone to take a trade. So basically the zone is a starting point. So we need to determine how strong the zone is, what is the freshness of the zone, whether it is retested multiple times or it is a fresh zone. Next, we need to do a multi-time frame analysis. Is there any other indicator that is supporting our trade, or is there any breakout or breakdown that will support our trade? How to place the target and stop loss. All these things we need to keep in consideration before taking a trade. So all these will be discussed in detail in the next video. So keep tab on the space, and meanwhile if you need access to this indicator or screener, you can contact the Telegram link or in the description. You will get the details for the access, as it's only an invite only access. So that's it for this video. Thank you and see you soon in the next. Bye bye.